All right. Hello, everybody. Welcome back to the Market Open. It is Monday. Monday. Let me know if the volume is okay here. I have the HD camera finally hooked up again, so it should be an HD and not just the basic camera we were using the past couple days. Hope everyone's doing good. This is going to be a fun week. It's going to be a very fun week. Lots of interesting stuff to talk about this week. You've been keeping up with the channel. But yeah, there's also going to be a fun week in terms of the market. Let me just tweet that I'm live right now. Live market open. We've got FOMC stuff. We got 75 versus 100, which I believe is definitely going to be seven. What is it? It's going to be 75. And we've also got a lot of other. Let me make sure it focuses. Big tech earnings coming out today. Sound is effed. Let me make sure sound is good. 1 second. Oh, I think that was it. The game was down. How about now? Let me know how about now. Should be good. Let me know if not. Thank you guys for being here. I get paid to wait. What's up? You asked if my mom's good. Yes, my mom is awesome. Justin Teacher, good. Thank you for asking about that. Bacon Bombs, what's up? Anybody launching a startup this week? I don't know. Is someone launching a startup? Obviously, July 27th is going to be a really interesting day. Going to be really exciting and really important. And I'm happy you guys are going to be here to see it with me. So without further ado, let's get into the actual market. First of all, let me get my bell real quick. It's right there. The market is opening in 3 minutes. If there's a delay in sound, that may be the Wi-Fi thing. So give it a second. The Wi-Fi usually catches up. Sound is great now. Okay, cool. Awesome. Everclear, what's up? Hello. Thank you, 53 people for being here. Let me open up my Webull. Market seems decent in the pre-market. Doesn't seem insane. I think it is going to be this is one of those weeks that's going to be really interesting to analyze where the market goes, how the market analyzes what's happening, and ultimately what the market thinks is, going to be a meaningful next couple of months. July is going to be over in 6 days. So that whole markets always go up in July, which historically has been true. It kind of happened. I mean, S&P's at 395, right? It went up from 362. But is there any sustainment to it? Can it actually, keep going? All that other stuff. Palantir is down to 983 in the pre-market, pretty much where it ended. I'm thinking of buying about $1,000 a Palantir. If I do that, I will let the channel know. Probably gonna be doing that today. I want to get my toes wet into some more Palantir. It's been a while, so I will be making that purchase a little bit later, either today or tomorrow. Eventually, one of these days, if we have a little bit of a downtrend, and maybe I wait a couple days and see what happens. But if anything, I think I'm gonna put at least 500 into it today, just because I want to start initiating some more buys. Netflix is up in the pre-market. Amazon is up pre-market. Nvidia is up. So I believe a CNBC article said 75 is confirmed. Oh, hold on 1 second. The thing stopped sharing. Give me 1 second, guys. And as a result of that, that's why I think we're going to see that happen. Do you guys see it? Yes. Okay. In 30 seconds, the market is going to be open. So let's go here. For those who don't know, on this channel, we have a bell. Only channel on YouTube to do this, man. Only channel. At least I think. And we will ring the bell and open the market. 9:29 a.m. We are going to see what happens in the next 30 seconds when we get to 9:30. And then we're going to go through all the big news we have coming up today. We have Facebook. We have Google. There's another company I'm definitely forgetting, but their earnings are really, really important as well that we're going to be going through. This week is going to determine, I think, what happens through September to December. I mean, it's going to be... By the way, I'm so excited for September through December. Like, I'm so over summer. Like, summer is whatever. I know we still got August to get through, but September through December is like where the fun is at to me. Personally, it's like when I feel the best. What up? Happy Monday, Martin. Happy Monday. All right, here we go. The market is open. Wake your ass up. The stock market is open. Let's see what's going on. We've got Tesla down 0.39. We've got Snapchat, goodness, down below 10. Snapchat's down another 2.5%. So Snapchat's getting hit. I realized I just learned Snapchat has $1 billion in debt the other day. I was like, oh, that's not good. That's really not good. Spotify 110. Spotify earnings are also July 27th. So I'm not going to be doing the market open July 27th. I'm just going to start my stream at 9:45, and there's going to be something else going on in that stream. But we will talk about Spotify after July 27th, probably on July 28th. Johnson Johnson 172, Enphase 211, Nvidia 170. Nvidia's been up a lot from the lows of 140, which means, I mean, that theoretically is the bottom for now, but we'll see what happens. Meta 169, Apple 154. Now, Apple has had a phenomenal recovery. I mean, Warren Buffett was buying it in the 130, 140s. He seems to be correct for buying it at that level. But we're going to see what happens. Streaming from the deep woods of Maine, Quarantine Quartet. Good morning. Good morning. Thank you so much for being here. That's awesome. Namir was up. Shout out to Namir, by the way. I was scrolling through LinkedIn, and I know I don't know Namir in person, but he's a subscriber, and I followed him on LinkedIn. And this dude is going to get his master's of, I think, mechanical engineering at Stanford. He just got accepted into the program. So phenomenal stuff. Awesome. Amit, I didn't see any videos for the 4 days and 3 days left. Did you make them? No, we did not. 4 days and 3 days, Saturday, Sunday. Me and my team just couldn't get together. But the 2 days and 1 day, you guys will appreciate. So we have a 2-day video countdown coming today and a 1-day video. The 1-day video, I think everyone is going to love. So it's going to be exciting. I think you guys are really going to enjoy that. All right, let's go on to CNBC. GameStop splits. Hold on, let's check that out. GameStop splits. I believe they launched their, okay, GameStop is 34. They're down 2% on the split. That's, you'd think they would be up. I believe their NFT marketplace I saw had about 75,000 downloads. So they definitely got some people interested to download it. Question is now if, there's momentum behind it and they're actually going to be able to say it. Do you think the Federal Advisory Board from Palantir's main objective at the moment is to get the prime contract? I think their job is to help Palantir get more contracts. I don't know if it's the prime contract. The prototype they're building with Anduril, competing with Raytheon and C3 AI. Those are the 4 going against it for this Army Titan program, $36 million contract. Palantir just has to win that, right? I don't think the Federal Advisory Board is going to help them, but in other types of deals, I think Federal Advisory Board will help them. So quickly before we get into CNBC, let me explain what happened in the title. I said there's some Palantir news leaks. Let me explain. I'm going to be covering this on dailypalantir.com in a little bit, but let me open this up. So Ether Square, I'm pretty sure you guys know him by now. I've first of all, I've met this guy in person. He's an awesome guy. He has a lot of money in Palantir, but he bought it at like 2025 and he bought a lot of it. So he kind of dedicated, look at his bio, looking for Palantir links. The dude is like dedicated to making sure he didn't make a stupid investment because he knew like Palantir is a good company, but he just bought it so early. So when we were talking, we went to get dinner. He's not from America, so he came to visit New York. And we were just talking, and he was just like, bro, like once the stock price started going down to like 15, 14, I became obsessed with proving that I didn't make the wrong decision. And as a result of that, it led him to create this dossier. Okay, not dossier. I know I got screwed for that before. So you should follow him on Twitter. I'll be putting this on dailypalantir.com. Basically, what he does is he goes through a bunch of subdomains and he auto tracks them. He used this like unique methodology to figure out what companies are working with Palantir. And he found 126 potential clients. They might be in pilot phase. They might be Palantir clients for a long time. They might be new clients, but a lot of different clients that are potentially working with Palantir. So, for example, he said, I believe one of the most important companies using Foundry is Cariad, the future OS of all Volkswagen cars. This means Volkswagen is relying on Foundry to build their next generation of EV softwares. You can see other companies in the dossier 3.0. It also makes sense because Palantir launched an EV operating system with Wejo. They're known to work in the EV space. They work with connected vehicle data with Wejo. So there's a lot of opportunity for electric vehicle car manufacturers, charging stations, and softwares to be created by Palantir to be able to license to a lot of these bigger names that are building these things for the next decade of innovation when it comes to EVs. So definitely check this out. This is incredibly interesting. And it just shows the diversity of all these different people that potentially are working with Palantir. We're back to risk on. I don't know if we're back to risk on yet. I mean, maybe. We're going to see. I don't think yet we're back to risk on, but we are ultimately going to see. Okay, let's open up this article right here that I wanted to show. So this is some of the stuff that's going to be going on this week in the market. So we have Monday kicks off the final week of trading for the month of July and perhaps the most important week of the summer, with the Fed meeting, GDP data, and earnings from almost a third of the S&P 500, including 5 mega cap tech companies on deck. I think Microsoft also reports this week. This is the one I forgot about. Investors likely believe Thursday's GDP report will show a second quarter of decline, which is the unofficial sign of a recession. While the Fed will probably announce a 75 basis point hike on Wednesday, they will offer a more moderate tone towards further rate increases. We will see this counter trend rally continuing in the near term. So that's the part I'm really curious about. That's kind of why I want to buy a little bit more Palantir today and tomorrow. I'm not saying anyone else should. I'm just saying it's going to be interesting to see how the market reacts to this. That, okay, if you do 75, has the market baked that in, and that's not 100. If you do 100, then that means inflation's bad, right? That means the Fed knows something about inflation that the rest of the market doesn't know, or they feel something the rest of the market doesn't feel, which means they're going to be a little bit more, whatever. They're going to be a little bit more harder on the Fed. So that's that. And then we have the trend as a result of more moderate tone further rate increases. So it's like if we do 75 and Powell's like, yeah, we only think we need 50 going further, and then 25 in the next couple months, that's really bullish. And the reason that's really bullish is because that means inflation is going down. Now, if the Fed feels that inflation is not peaked, then they will not say this, because if the market rallies, that is worse for inflation. Like, inflation is bad and the market is rallying, that's not good. You need to destroy demand. You need to destroy it. You need to like induce a pseudo recession. You need to not have stocks go to the moon when you have inflation. But if they feel like inflation is going down and it's going to steadily come down and it's absolutely peaking, which is what we saw when the 9.1 print came out and the market kind of shrugged it off, then that means we're going to have less need for 75 or 50 basis point hikes in the future. Definitely not 100, which means things are going to be okay. I think it's going to get better. The S&P might actually have that rally, and maybe we have either a crash in 2023 or we have avoided a potentially really bad crash and we just had like a small mini recession of down 20 to 22%, but nothing down 30 to 35%. That's the very interesting thing of what we're going to see in this market, and that's the part I'm really interesting to see what's happening. On Friday, the major averages fell in the back. Still, all three benchmarks closed the week higher, so the Dow, S&P 500, and NASDAQ were all up last week and did really well. This is the S&P 500 in 2022, 4793, December 29th, and this is where it's at right now. So the lowest, again, was here. This is June 16th, 3,600, and since then, it's, now we're at 39.61, which is still a big decline, but you could argue at this level it was just absolutely insanely overvalued, just given, liquidity in the system, interest rates, all that stuff. So that's what is interesting me this week, and I'm going to be really interested to see how it happens long term. Curtis, thank you for being here. I appreciate you. Palantir should wait until the economy slowly starts to creep up and then release partners on the daily. I think that's kind of what they're doing. I think they're waiting until the market gets better objectively, and then they're going to start releasing a lot more news. But we're going to see what happens. It's exciting to see how Palantir is working on this stuff. Give me one sec. Okay. Okay, so let's open up YouTube now. We're going to open up one of the clips I wanted to see, and we're going to keep going from there. Weber CEO jumped grill, and now he's sinking down 18%. Wow. That's interesting. Okay, here we go. So this is what the stock market wants to know. The Fed is actually serious about inflation. Let's check out this one, and then we'll be back to discuss big tech earnings coming up this week.
Later this week, where another big rate hike is expected. Joining us right now is Kevin Hassett, served, of course, as chairman of the Council of Economic Advisors under President Trump. He was also a senior advisor to the president. He's now a distinguished visiting fellow at the Hoover Institution. Kevin, good morning to you. If you could advise Jay Powell as to what he should do and what you think he will do.
Well, I think what they're going to do is they're going to give us 0.75 of a point rate hike. And what I would advise him is that he should do more than that. The fact is that inflation is now, if you look at like a rolling average over the last few months, running north of 10%. And that's the highest inflation we've seen. I've been on Squawk Box for more than 20 years. We've never been in a time where we've had inflation like this. And we're also kind of in recession, right? So it's a difficult time, but they have to get ahead of the curve on inflation. They're going to give us 0.75 of a point. They've really shown that, and talked about that over the last couple of weeks. But I think they need to do more because inflation is so high.
Kevin, if in fact they went as high as you want them to go, what do you think the stock market would do? And should it matter?
I think the stock market wants to know that the Fed's serious about inflation. And I think 3/4 of a point is sort of just about there. But I think if you went more, the stock market might actually celebrate, because inflation has to be under control. And the reason is that when you have inflation this high, it's really hard for output and all the other stuff to keep up with it. And so, real incomes right now, year over year, are down about 4%. That means that real product has to be down about 4%, because, product eventually catches up with income. And so if inflation doesn't come down, then you're looking at negative GDP until inflation is down. And, that could be another, 2, 3, 4 quarters. And so I think if they were to hit us hard right now, it actually might be something the market would celebrate.
Kevin, I want to play you a soundbite from over the weekend.
So real quick, when he said if they hit us hard right now, he thinks the market would celebrate it. I agree with that as well, right? So it's like if they hit 50 basis points, the market it might rally, but it also might be really weirded out. But if they hit a 75, which is above normal, and they warn that they're not going to have that many 75s in the future, that means they think inflation is peaking. And if they're wrong about inflation peaking, then oh boy, it's going to be bad. But if they're right about it, which it seems a lot of people are analyzing they are right, because commodities have peaked and gas prices are coming down, energy, all that stuff, then there might be a world in which this market actually rallies. So that's the interesting part of this week.
This is Treasury Secretary Janet Yellen speaking about the R word, a potential recession, yesterday on Meet the Press.
This is not an economy that's in recession, but we're in a period of transition in which growth is slowing. A recession is a broad-based contraction that affects many sectors of the economy. We just don't have that.
You buy that?
No, I think that's kind of unfortunate. And as you know, I'm an old friend of Janet's, and I have high regard for her. But I think in this case, if I were in the White House, I would not be out there sort of denying it's a recession. The fact is that the first quarter was big and negative. The second quarter, according to GDP Now and other real-time forecasts, is also going to be negative. We get that, basically this week. And then you got 2 negative quarters. If you go back to World War II, we've had 2 negative quarters 10 times. Every single time was in a recession. And so we're 10 for 10. And so for the White House to be in denial, I think is the wrong thing. If I were in the White House right now and I were advising President Biden, then what I would say is, hey, we're getting really bad economic data, and we need to basically get out in front of it, let people know that we've got the bad economic data, that probably is a recession, but then we need to have a plan to fix it. And so I think that one of the reasons why they're in denial is they don't have a plan to fix it. And so they're just in denial. So they were in denial about inflation. Now they're in denial about the recession. And it's just not a good look. I think the American people expect politicians, Democrats or Republicans, to be square with them and to say, here's
what do you make
on.
of the argument?
And
even our friend Joe Kernan here was defending the administration to some degree in the last hour, saying, look, and I don't want to put words in Joe's mouth, but the idea of where we are in terms of unemployment in the country maybe gives you wiggle room, a lot more wiggle room than you think.
Well, I think that people are pointing at the jobs numbers and the low unemployment rate. But if you go back and look at the history of recessions, it's pretty common for those things to move a little later. And the reason is that there's a big fixed cost to hiring people, and you don't want to let them go the minute that you see bad news. And so it takes a while for people to start to have layoffs. But one of the things that you see is usually in about the second quarter of the recession, initial claims for unemployment insurance start to go way, way up. And when they hit 250, it's kind of like a barrier that I notice. And we just hit 250 last week. So I think that on the labor market, we're basically in a normal recession. And so the idea that the labor market is tight, but the rest of the economy is strong is not really an argument. That's just like an argument that disregards history. History is that labor markets, wages, and employment move slowly.
Okay, so a lot of you in the chat are basically kind of agreeing with this guy. So the Janet saying that we're not in a recession is probably a bit disingenuous, right? Especially given the way not only the stock market has been hit, but how Americans have been hit. Now, the reason she gets a little bit of like oomph to be able to say this is because there's 11 million jobs open. employee wages are at all-time highs, right? The ability to actually get a job and do all like the traditional things you would think shouldn't happen during a recession, like massive amounts of layoffs and all this stuff. It's just not happening yet. So it may not ever happen, right? This may always just be a 2-quarter GDP negative technical recession, but not a recession that feels like a great recession in 2008 or 2000 or anything like that. So as a result of that, the administration is trying to deny it, especially because for the midterms, that's going to be incredibly important. Obviously, for the Democrats can frame, hey, we're not in a recession right now. In general, if you look at the economic data, things are bad, right? The things are very bad. Joel, what's up? What's up? What's up? Joel, not Joel, Joel. And so it's really interesting to see how this is happening. Someone said inflation is peaking because we're going into recession. So bullish. That's another interesting thing, right? Like, is inflation just peaking because it's about to all come crashing down? Like, I think this is the weird part about the market that's incredibly interesting to me. If inflation is peaking and the market rallies, is that sustainable? Is that like another COVID 2020 thing where, we're like, oh, the Fed's going to save us, so we're just going to rally? It's like, but this rally doesn't make any sense. Like, it's not supposed to just like, should Facebook go to 300 again just because inflation was peaking and because things are back on normal? Maybe, but also maybe it should happen at a much more slower, natural path where Facebook stays at 200 for the next 3 or 4 years before it ever reaches those all-time high again. That's personally how I would like it to happen, because I think slow and steady is way better than what we had over the past 2 years. But if that's the case, then we have to see how the Fed feels about inflation coming up soon, and we have to see earnings. We really have to see where is going to be the downside on Facebook and Google or the upside. So let's look at one more clip, and then we'll talk finally about earnings. And it's going to be this one right here on earnings. Here we go. Let me share this, then we'll talk.
Welcome. This is the busiest earnings week of the season. We've got about 40% of the S&P 500 reporting this week. Steve just talked about how profits are getting squeezed, operating margins are getting squeezed. What else are you going to be watching for in these earnings reports?
Yeah, so interestingly enough, I think the real action will be the revisions that come following Q2 earnings or the lack thereof. I think that'll be pretty telling, right? If you think about Q1, when we got significant revisions immediately after Q1 earnings from Microsoft and Best Buy, as an example, that kind of told us what we were in for the preceding time before Q2 earnings. I really think that that's what we're looking at now, where if we see a lack of revisions come out after Q2 with, sort of downbeat earnings projections from CEOs today, I think that that'll tell us maybe we're at the peak of this bad news cycle, and maybe that's a good indication to investors that maybe you can start to work your way back into the markets and expect to see a little bit smoother sailing, toward the end of the year.
That would be the all clear sign for you?
I would think that it's, at least for more aggressive investors, I would think that that does spell this is a good time to be in the market.
The other issue we've been talking about is whether or not we're in a recession. Joe made the point earlier this morning that it's hard to say you're in a recession when you have such a strong jobs market, but we will be getting some hints from CEOs.
Okay, I want to pause there real quick. So Monday, today we have Squarespace. No one cares about Monday. Tuesday, McDonald's. Okay, so Tuesday matters because we got Google and Microsoft. That's what matters. Wednesday, we have Facebook. That's what matters. Thursday, we have Apple. Oh, Apple was the other one I forgot. Okay, so, and Amazon. Wow. Oh my goodness. So Tuesday, we have Google and Microsoft. Coca-Cola is going to be interesting as well. A traditional value stock, Wednesday, we got Facebook. That's going to be a big one. Kraft Heinz, another like value stock. Boeing is going to be very interesting as well because they have people that are striking. The workers are striking against Boeing on August 1st because they couldn't come up with the deal. Ford is also going to be interesting to see what their EVs are looking like. Thursday, you got Amazon and Apple. I mean, Apple has been warning things are not going to be that good, but we're going to see if they can. The last quarter, they had a Tom Brady quarter. They hit it out of the park. We're going to see what happens. Amazon, AWS, I want to see what's happening, but also retail sales going down on Amazon means that people aren't buying that much, which means technically there may be, less demand. And then Friday's going to be a little bit boring. It's just like gas companies. So interesting. So we'll see what happens.
On some of those issues too, you've heard big companies like Microsoft and others say that they're going to slow hiring.
Yeah, so I heard you guys initially talking about fuel costs coming down as sort of a good sign, right? And layoffs and slowing down hiring is a good indication. But I think with housing being such a big portion of the CPI figure, and all of this being tied to CPI, all of this being the Fed action being tied to CPI, housing accounts for 1/3 of that, and the cost of a mortgage or even OER has risen, significantly since the start of the year. So I'm afraid that we haven't really seen the peak of anything just yet, even at a 9.1% print last month. And so the focus for me really has to be on housing. It's a significant enough portion of those currently renting and want to purchase are finally able to. That would help calm those housing supply versus demand concerns in a meaningful way, right? So I'm concerned by the latest home builder sentiment numbers showing a drop of 12 points. We're already behind by 5 million homes as it is. And one of those reasons for that deficit is because the home builder sentiment was so low coming out of the Great Recession, and they didn't resume building at normal numbers for, I think it was like 6 years immediately following the Great Recession. So to me, that's where we really have to focus our attention more, telling us whether, we're headed into recession, already in a recession, how much more prolonged this thing is going to be. To me, housing is where the action really is.
So this guy says that we haven't seen the peak on inflation. Everyone has different views, man. And this guy says housing is what's really going to matter. Now, housing definitely matters in my opinion, and I think there is a really good argument that housing prices are going to come down substantially over the next couple months. But it's like, does that mean the stock market? It's like, it's going to be really interesting to see what happens. I think earnings is going to know a lot. We all know Wednesday is the most important day this week. Any special guests lined up for the launch? Actually, yes. So for the 202 people that are here, I hope you tune in on July 27th, 10 a.m. I will not be doing the market open. I will be opening up my life to the rest of the world. And I really hope you guys join, especially if anyone's interested in just branding, marketing, or how to bring an idea to the world and pitch an idea. I think it'll be a good case study for anyone who wants to see, even if you're not interested in the idea. I'll be announcing my startup to the world, and there will be some guests that you guys will be able to see in a different way. So it'll be interesting. People are still buying homes, 750,000 out here in California. Yeah, the home prices in Cali are insane. I mean, California is just a different level. It's just absolutely insane. But we're going to see how it plays out. Now, let me show Facebook earnings or Meta earnings preview, what people are expected, along with Google earnings preview. So, here we go. Meta earnings are expected to decline. Let me share my screen here. This is what we're expecting. How can we invest in your in your company on July 27th? All the details will be announced. And you can invest for a minimum of $100 because of the platform we're using. So it's really cool. So July 27th, I will give you all the details. Please, July 27th, right there. Look at this. July 27th. Be there. This is one of those streams you don't want to miss. It's an exciting one. It's a fun one. I know I've been hyping it up. I think we'll follow through on the hype, and I think you guys will enjoy it. So definitely make sure you're there. So social media companies expect to post quarterly earnings of 2.51 cents per share, which is a 30% year-over-year change. So they're expected to miss earnings per share. They're expected to decrease their earnings per share 30% year-over-year. Revenue is expected to be $28.9 billion, down 0.6%. So if they match $28.9 billion on revenue, which I think they'll do. Now, if ad spend is going down, and that's where you got Zuck saying this is the worst economic downturn of all time, then they're not going to hit $28 billion, and it's going to be really bad. Let me rephrase. It's not going to be really bad, but it's going to be in line with what we've been hearing about, like Facebook not being able to meet what they need to meet, right? So if it's down 0.6 from last year, that doesn't matter that much. I mean, it's pretty much the same revenue. It's not that crazy. But if they don't meet that number, that's going to be the interesting part. Okay, so this is all we kind of needed from here. So this is going to be the important thing. Now, DAUs, it doesn't bring up here. I think last quarter they had 3.6 billion monthly active users and 1.93 billion DAUs, which is down from 1.95 billion DAUs from the quarter before. If that number is below 1.93 billion DAUs, that is another issue that we are ultimately going to see happening. But like, we've got to see that. TikTok is a different animal. For those who are not using that product, it is a really, really unique product. And as a result of that, I think that there is a world in which they see a lack of DAUs. And if that happens, then it's also going to be, obviously not the best for Facebook. I had a coworker tell me they spent the weekend house shopping because now is the time to get a great deal. Too many people don't understand interest rates. Yeah, I agree with this as well. If Cali keeps this up, I think people will just move out of the state. I agree. I mean, we've seen a lot of people already move out. So let me pull up another earnings. What do we have? Let me try to get Google earning previews. I think Google's expected to like 70 billion in revenue or something like that. That's where they're looking for. Yeah, here we go. Okay, so here's Google. So Google is expected this quarter to do will report an 11 with Wall Street believes they're going to report an 11% year-over-year rise in revenue to 63 billion and a 3.7 increase in profit to 23.2 billion. So if they grow 11% year over year, that's obviously not growing 30 or 40% year over year, but that's more in line with what a very big tech company should. 63 billion. I will tell you from my YouTube ad revenue, I'm seeing that it is definitely declining. So I think YouTube may not put up phenomenal numbers. I think they put up like 6.7 billion last quarter, which was down from the highs of 2020, which makes sense because 2020 was obviously an anomaly. Everyone was home. But if YouTube goes down and Google search goes down, then that means, you know, it's not growing as much as you think, which is also, that's why it's kind of crazy for me to like blame these companies because they're so big at this point. Like it's so hard to keep growth up. But that's also why you don't expect a 10x from them. You expect hopefully like a 2x over the next 5-6 years versus a $10 trillion company, maybe a $3.4 trillion company. Their rise in Google Cloud, I think they did about 5.8 billion last quarter. They're expecting a 37% rise. This is the main grower for Google Cloud because AWS and Azure have really been eating Google's lunch just because they're a little bit early. But everyone who talks about cloud computing services says that Google is likely the best. 6.3 billion. I have a startup. We use AWS as well. Honestly, it's just easier than everyone else. So the fact that, you know, we're paying AWS $200 a month and not Google, like that's business Google should be getting, right? Why do we use Amazon? Because it was just easier. It's more efficient, all this stuff. So they have a lot of work to do to get smaller guys like us. Because if you get 1 million of us to give you $200 a month to use Google Cloud, I mean, that's a lot of money, right? Its operating loss will be about 682 million from the 591 million loss seen last year. So they have to spend more money to actually be able to get that revenue in the first place. So that's going to be interesting. Google and Apple. I would not buy it before earnings personally. I definitely want to wait to see what happens. Even if it does have a nice little pop, you got to remember they already split. So the split already happened. So then even if it has a nice little pop, does the market sustain that rally? Is there any life to Google and Facebook actually being able to keep going long term? By the way, to end out this live stream today, do you get free Uber delivery with your AWS? No, we don't. Amit, why not use Palantir Foundry? So this is a question I've been asked a lot about my startup. Palantir Foundry is when you have massive amounts of data. We don't have massive amounts of data yet. We have a lot of data, but not to the point where we need this like central ontological platform to be able to use all of our data in one place. Now, in the future, definitely, I think that's a possibility. But for now, AWS is more than enough. Also, Foundry would cost a lot more money, especially because we're a lot younger. So in the future, we eventually will. Trying to time the market, huh? It's not timing the market. It's just not buying at a certain day in the market. Okay, let me share my screen. This is the end of the live stream. Thank you, 200 people for being here. Really appreciate it. So I guess I did a podcast with Tom over the weekend, and he found this thing of me. You guys see this? I know he sped it up, but that's also like probably in person. It wasn't that slow either. And my caption was earnings coming up got me like. Yep. Earnings coming up got me like. Earnings coming up. All right. There we go. How many users would you need to have used? It's not really about users. It's just, well, if users provide data, then yes, but it's more so about like how many different operations are going on. And we're not at the point where we're using deep learning and machine learning on our platform yet. We have an elementary intelligence algorithm that is guiding the nature of the platform. But when I say elementary, I say it's sorting through about 10,000 pieces of content that users have uploaded on our platform. We would need close to 100,000 pieces of content uploaded. So a 10x increase where we really need a lot more management of that data from an intelligent perspective, because that's what Foundry does. They don't just store your data. AWS can do that, right? You need actual interpretation of your data. Okay. So this is all this shame over time to time the market. You should be trying to time to its earnings. Yeah, I mean, you should like it would probably like, for example, when Google's 115, it's probably not the best to buy Google that day because the whole market is green. I don't think that's timing the market to not buy Google on the most green day of the market. I think it's like, oh, it's probably not going to keep going up like crazy given all the factors we have. I should wait a little bit. So that's kind of where I'm at in terms of seeing that. I miss you on Money Talks, bro. Are you coming back? I will not, but I do a podcast with Tom, so definitely check that out. It's called Can You Learn to Speak My Guy? But I will not be on Money Talks. I slept in way and missed market open. It's okay, Felicia. Thank you so much for being here. I'm done. July 27th is going to be a very interesting day. I appreciate anyone who joins. I will probably be doing late night stock talks today. I can't promise it because I have a lot of crap to do, but I probably will. 2-day countdown video coming today. I think you guys will enjoy. 1-day countdown video coming tomorrow. I think you guys will really enjoy. At least the OGs will watch that entire video and they will very much enjoy. I appreciate everyone being here. It means the absolute world to me. This is a very big week in my life. This week, things change for for the rest of my life. And it's finally time to execute on a dream and a vision I've had for the past 2 years. And I'm just so excited and so ready. There's not a nervous bone in my body because now it's time to really get this to the world and see what the world thinks about my vision. So thank you so much for being here. I appreciate you very much. 10 a.m. Eastern time Wednesday. Yes, I'll be live 9:45, 15 minutes. We'll get things ready. And then 10 a.m. the announcement is there. And then I'm planning to stream for the next couple of hours. We have some things I will be showing, and you guys will be able to see. We're excited too. I appreciate you guys. Man, I can't tell you how much it means to me. I cannot tell you. I was doing this in 2021 and no one cared. And it's tough when no one cares, and you got to work and you got to really fucking dedicate yourself to get people's attention and get people to care and build a community, build an audience, offer value to people to the point where they actually care about things going on in your personal life. And it's been a year and a half of grinding to build that out. And now it's time to finally get this out to the world. So thank you so much for being here. I appreciate everybody. July 27th, 2 days until the world gets to see what happens. And I will see you all tomorrow. Big tech earnings, a lot of stuff going on this week as well. So a lot of stuff to cover. Thank you guys for being here. Thank you guys for allowing me to give the news to you. And I appreciate it more than anything I could ever imagine. I'll see you guys later. Have a great Monday, and see you later today. Bye-bye.